Good day, everyone. I hope you enjoy this short recording on question 10.2, only the A part, and that deals with the statement of profit or loss and other comprehensive income specifically. We read the required part. They ask us to prepare the statement of profit or loss and other comprehensive income for the year ended 28 February 20.4, financial year, always an important date to remember. You have recently been appointed as the Assistant Financial Manager of Amer Distributors, and it is your responsibility to compile the financial statements for year ended 28 February 20.4. The Financial Division already compiled the pre-adjustment trial balance, so prior to the adjustments for this year, except for the additional information brought to your attention. You could not find any other mistakes in the handling of the accounting matters related to transactions and balances. So if we read the required part, we first of all get a framework ready so that we can find a method in the madness. The framework for the statement of profit or loss, and remember it's financial performance, so it's for the year ended, starts off with an adjusted sales figure, which we call revenue. From that, we deduct cost of sales to get to our gross profit. Then we have a section for other income other than the trading income at the top there. Our other expenses other than cost of sales. And then we have a separate item for finance cost. Finance cost, your interest, income and expense as a net amount under finance cost so that we can finally calculate our profit or loss for the period. Just have a look at the pre-adjustment trial balance to finalize your framework. First of all, we need to determine, did we apply the periodic or the perpetual inventory system? And in this case, we scroll down until we find the item cost of sales. So cost of sales tells us that we use the perpetual inventory system. So in our framework, we don't need a calculation of cost of sales. We can just use the cost of sales amount that was given in the pre-adjustment trial balance. Other important information also, look at all your non-current assets. So we've got all of these items. And you need to know that the costs of these items, the cost accounts, will be as at the 28th of February 20.4, while the accumulated depreciation, because this is pre-adjustment, so it's prior to the adjustments for the current year. So the accumulated depreciation accounts is not as at the end of the year, but it will be as at the start of the year, prior to the adjustments for this year. The last item that I just want to highlight quickly is the stationery. Remember, in stationery or other consumables, we have two options for the managers. They can either account for the purchased consumables in the asset account on hand, or they could account for it in the expense account. Now, we do not see at the bottom here any stationery expense. So they chose to account for stationery purchased in the asset account. Back to our framework. What I recommend, you earn the marks as you read the question. So from the trial balance, we can include all the amounts given in brackets after the terminology that we wrote down. So for revenue, for instance, I will start with the sales amount in a bracket as the amount from the pre-adjustment trial balance. The same for cost of sales. I did not have any other income. So over here, I just left out the section for other income. Then I started with my other expenses. So salaries and wages. I know that I'm going to have a stationery expense account, but can you see we did not account for it in the stationery account from the start. So this will start with a 0. I accounted for it in the asset account. And so we will carry on with all our other expenses. Our interest expense is the item listed here under finance costs, so that I can adjust all of these figures with the additional information. We are now going to deal with each additional information item, determine the debits and credits for the adjustment, and then identify which part of the adjustment will influence my statement of profit or loss, because this is only what's required from me. I don't have to do any other statement at this point. Additional information number 1. The owner took stationery with a cost price of 120 Rand for private use during January 20.4. That's within my financial year, so I need to adjust it because of the accrual concept. No entry for this transaction was made in the records to date. So if the owner withdraws, I need to decrease equity. So I will have to debit the equity. And which account are we going to credit? I cannot credit the stationery expense because they accounted for all the stationery purchased in the asset account. So I will have to debit my equity drawings and credit my asset stationery on hand for this missing transaction. None of these accounts will influence my statement of profit or loss. Over to number 2. An EFT issued to buy inventory from Pretoria Fabrics for 7,500 was incorrectly recorded in the journals as a payment to one of our largest creditors, Pretoria Wholesalers, and was posted as such to the ledger. So they tell us this is an EFT, so something happened to bank. I had a credit in bank. The credit in bank is correct because it was a payment but not to a creditor to buy inventory. So my credit in bank is correct, but the debit need not be in the creditor, Pretoria Wholesalers. I want it to be in the inventory account. So I will have to debit the inventory for the purchases of inventory and credit the creditor's control, because I need to increase the account of Pretoria Wholesalers again because I didn't pay them. So I need to increase their account again. Can you see none of these items will be an income or expense item? So I cannot influence my statement of profit or loss. In number 3, a credit note for 1,500 Rand for goods returned to Bulk Buyz was received on the 20th of February. It's again within my financial year, so according to the accrual concept, I need to account for this. No entry was made for this transaction. A credit note returning inventory. So my inventory will decrease and my creditor will also decrease because I will owe them less because of this return. None of these items will have anything to do with an income or expense item. So no influence on this statement of profit or loss. In number 4, they tell us that the allowance for credit losses must be adjusted to 3,008 Rand. Now we need to determine what is the current balance in the allowance for credit losses. And we see that we have 2,500 Rand as our current contra asset. What do I need to adjust 2,500 Rand with to get it to add up to 3,008? I need an adjusting entry of 508 Rand. So I will increase the allowance for credit losses. So the increase is on the credit side. Corresponding debit in my credit losses expense account. So your credit losses account will actually contain your actual credit losses due to insolvency or debtors disappearing, plus then the adjustment to the allowance for credit losses. Credit losses is an expense account. So the influence on the statement of profit or loss will be an increase of 508 Rand in the credit losses expense, which I started out with a total in the first place from the pre-adjustment trial balance. Additional information number 5, they have a stock taking requested by the external auditors on the 28th of February revealed the following. I have inventory on hand, so my merchandise, my assets that I purchased with the purpose to sell amounted to 61,500. My unused stationery, so this is my consumables on hand, amounted to 1,500. So the accounting clerk responsible for the recording of the inventories did not have these figures at her disposal. Let's first deal with the inventory on hand, with the merchandise. In my pre-adjustment trial balance, I had a value for inventory of 65,000. I had adjustments to this 65,000. So I had an additional information items that influenced the inventory. Remember, number 2 and 3 influenced my inventory. So that will give me the amount that I think I ought to have in my storeroom according to debits and credits. If I compare what I theoretically have in inventory with what I actually saw with my eyes, this is the inventory stock count. So I actually saw it with my eyes. Which one are you going to believe? You're going to believe what you saw with your eyes. So the difference between theoretical and actual will be an inventory deficit. So I have my 65,000 in the pre-adjustment trial balance minus the 1,500, the inventory adjustment that I made earlier. So this will give me an amount of 63,500. But my inventory that I saw with my eyes, my actual stock take, is only 61,500. So to change theoretical of 63.5 to 61.5, I need to deduct 2,000 Rand, corresponding debit in the inventory deficit account. The inventory deficit account is an expense account, so I will have to adjust my statement of profit or loss. The statement of profit or loss, however, deals with the trading section at the top here. So remember, if inventory got lost or stolen or whatever the case may be, and I accounted for it as an inventory deficit, I could not sell those items. So the inventory deficit will have a direct influence on my trading activities. Therefore, I add the inventory deficit to my cost of sales, which was given in the pre-adjustment trial balance. It's not a separate item under other expenses because, like I just explained, the inventory deficit will directly influence your trading activities. The next item under number 5 that we're going to deal with now is the unused stationery to the value of 1,500. Again, let's just have a look at how we accounted for it in the pre-adjustment trial balance. You remember we had a stationery on hand account, an asset account of 6520. But now we also made adjustments to the 6520 when we had additional information number 1. So I would have to calculate the stationery on hand just before the stock taking. So I had 6520 from my pre-adjustment trial balance minus the 120 Rand drawings by the owner. Remember, additional information number 1. So this is what I say I had in my asset account just before the stock take. Now, when they counted it, the actual amount for stationery on hand is only 1,500. So I will have to determine if I had available for use the amount 6520 minus 120. That's what I had available for use. But unused is 1,500 at the end. That means that I have consumed 4,900 worth of stationery. Consumption goes to an expense account. So I'm going to account for the 4,900 difference between what I accounted for, what I had available, and what I counted. I'm going to account for that as my consumption in the stationery account. That is an expense account. So in my statement of profit or loss, I will have my stationery consumed of 4,900. Can you see in the framework that I'm earning the marks as I read through the additional information? In number 6, during September 20.2, that is before the start of my financial year. It's important for me to know this because I need to know when I started off owing the bank. Amer Distributors experienced cash flow problems resulting in a loan that we obtained on the 1st of October 20.2. So that means in this financial year, we had the loan from the start of the year. Interest at 15% per annum on the outstanding balance is payable. Now remember, accounting is not about the cash concept, it's about the accrual concept. So they give us payment, they give us cash information here annually on the 30th of September, but I'm not interested in cash now, I'm interested in accrual. So if the interest rate is market related, I know that I won't have a problem with authorities because I have a market related loan. But an amount of 14,000 was repaid to Hillside Bank on the 30th of November 20.3. So remember, when we have a loan, we have the capital amount for which we need to make repayments or pay installments. This is capital repayment, the 14. And then because I can use their money, I also have to pay interest. So it's two separate transactions, paying an installment and paying interest. Okay, if this installment, this 14,000 was paid on the 30th of November, that means the payment was made before year end. If I then have a look at the balance of the loan in the pre-adjustment trial balance, this 86,000 is after the repayment of 14,000. If I want to calculate the interest expense now, I cannot start with the 86,000 at the start of the year because I owed them the 86,000 plus the 14, which will give me the 100,000. So I owed them 100,000 at 15% for 9 months. That is counting from the start of the year, so from the 1st of March until the 30th of November when I made my payment. Then it changed over to 86,000 at the interest rate again, but now only for 3 months, from the 30th of November until 28th February 20.4. So this will give me the interest expense that I want according to the accrual concept. I want the interest expense to be 14,475. But in my pre-adjustment trial balance, my interest expense only added up to 8,750. What do I need to adjust 8,750 Rand with to get it to 14,000? I need an adjustment of 5,725. So I will debit the interest expense because I need an increase in the expense account and credit the expense payable. Interest expense is an expense, obviously. So I will need an adjustment in my statement of profit or loss. In my statement of profit or loss, remember, you started off under finance cost with your interest expense. So I add the adjusting entry, 5,725 positive. The telephone account for February this year, that's in my financial year, was erroneously paid twice. So I have a debit in the telephone account amounting to 400 Rand that I don't want there. What do I need to do with a debit to get it out? I credit the telephone account, corresponding debit in prepaid expense. So the telephone account is the expense account. warranting an adjustment in the statement of profit or loss. And because it's a credit, I need to deduct it from the expense account. Number 8, the water and electricity account for February 20.4. Again, this is in my financial year, has not been received to date. Inquiries at the City Council revealed an outstanding account of 1,100. Outstanding account means I need to accrue for this expense incurred. Although I haven't paid it yet, accounting is all about the accrual concept. So I'm going to have to debit the water and electricity and credit expense payable. Water and electricity is my expense account, which will be adjusted in the statement of profit or loss. Number 9, we received an attorney's letter during February, again in this year, indicating that Piet Penniless, a debtor owing us 550, so the total debt was 550, was declared insolvent, and a first and final dividend of 20 cents in the rand will be paid, but only during April. So I'm only going to receive the cash during April, but the balance of his debt should be written off. If we receive 20 cents, what would the balance then be? The balance would be 80%. So I'm going to take the total debt of 550 times 80%. That will give me 440. So I need to adjust the credit losses with 440 and deduct the amount out of my debtors control for Piet Penniless. Can you see the cash part will only happen in April? So it's still a debtor to me until April. Adjustment in the statement of profit or loss, I need to add the 440 to my credit losses that I already have. Now the nice one, the policy of the entity regarding depreciation. Remember, as soon as you see depreciation and you need to do calculations for depreciation, write down formulas. For buildings, I need to adjust the depreciation with 2% per annum on the straight line method. Straight line method, formula, cost minus residual times a percentage times an amount of months. For the equipment, I need to calculate depreciation 20% per annum on the diminishing balance method. So diminishing balance formula is cost minus accumulated depreciation times a percentage times an amount of months. For vehicles, I again have the straight line over the useful life of 6 years. So now you can either determine a percentage using the 6 years, so say 100 divided by 6 to get to a percentage, or the formula for straight line can now change to cost minus residual divided by useful life years. In the additional information, just before we do the calculations, they tell me Amer Distributors decided to improve their services and bought equipment for 11,500 on the 1st of May. So equipment is according to the diminishing balance method over here. And diminishing balance method is a formula for cost minus accumulated depreciation times a specific percentage times a specific amount of months. If I bought this equipment in this year, in my formula, the purchased equipment would have a different accumulated depreciation to the old equipment. It will also have a different amount of months compared to the old equipment. So as soon as you buy new assets, in your formula, you will then need to calculate depreciation for the old and the new assets separately. All the other equipment was purchased at the start of the year. There is no residual value on equipment. So if we can do our depreciation calculations, we need all the information from the trial balance. And now we can start with buildings. Because it is straight line method, it's just a function of cost minus residual. They don't mention residual, so I can't deduct anything, times the percentage, which was given as 2, and I had it for the whole year. So times 12 over 12, which is 1. So the 2280 is the depreciation on buildings. If we now go over to equipment, remember equipment, we purchased new equipment. We bought equipment during the year. So for the equipment, I need 2 formulas. One for the new equipment, and that 11,500, I only had the use of the asset from the 1st of May, 20.3. So that's where the 10 out of 12 comes from. Also in my formula, it's cost of 11,500 minus accumulated depreciation. But a brand new asset cannot have accumulated depreciation, so I'm not deducting anything from that. For the old equipment, this is important. The equipment amount here at cost in the pre-adjustment trial balance, remember this 66,000 already includes the purchased 11,500. So for the cost, I need to determine total cost minus new cost to get to the cost of the old equipment. Then only can I deduct the accumulated depreciation, which I get from the pre-adjustment trial balance, multiplied with the percentage, and I had these old equipment for the whole year, so times 1, because it's 12 over 12. And that will give me the 6040 for the equipment. Last one, for vehicles. I need to calculate it using straight line method. So straight line is cost minus residual. So the cost for the vehicles, 54,000. They don't mention a residual, so it's minus nothing. But now I can divide it by 6 because of the 6 years useful life. I had the vehicles for the whole year because they don't mention a purchase during the year. So it's times 1 or 12 over 12. If we now account for this, remember this is the mathematics. We're busy with accounting. I will debit depreciation, credit accumulated depreciation for each type of asset. So you need to give a surname. And here I have the amounts that I just calculated, add them all together, and that will give me depreciation, which is the expense that I need to adjust in the statement of profit or loss. Statement of profit or loss, I add all my depreciations, and remember in accounting, more is more, not less is more. So please show your calculations clearly so that we can give you method marks if you made a mistake somewhere. Fantastic. So if I take my statement of profit or loss and other comprehensive income now, I close all the brackets. Remember you had information over here that you started out with, plus or minus your adjusting entries. So close these brackets and then we can determine the amount that we put in the amount column. I just want to highlight that if it is an expense, you need to show it in brackets, like cost of sales that we have in brackets. All of these expenses are put in brackets because you can't have a list of positives ending up with a big negative at the top that you deduct. So please remember to put each and every expense item in a bracket. I also have my finance costs separated from my other expenses, and that one is also in a bracket because of an expense being deducted. And then I have my profit for the period of 20 to 35. I trust that you found this informative. There will be a follow-up video to deal with the statement of financial position for the same exercise.